Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. I am Prashant. With me, my colleagues Sonia and Nigel. Guys, hi. Good morning. It's perhaps going to be a little bit more of a wait because the market is indicating a slight downtick. There is the big sort of US print, inflation print, which comes out later tonight. And I think global markets are keenly awaiting. That is the single most important data point today. US market snapped a three-day rally, and we ended between 2 and 2.5% on the S&P and the Nasdaq. It's a complete train wreck on cryptos. I mean, Bitcoin has lost almost 40% in value in 2 sessions. It's about the $16,000 mark, and it's the largest two-day fall since 2020. Are there any spillovers to the rest of the asset classes? Perhaps no. And SGX Nifty is indicating a 90-point downtick after the pullback that we saw yesterday, which brings us, if we get this kind of open, you're basically looking at about 18,100 at start. Guys, good morning.
Hi, morning Prashant, morning Nigel. Morning. You said the single biggest data point was what? The CPI data.
I think you're looking at Bitcoin, is it?
No, I'm the single biggest thing today is the India-England match. I mean, post 1:30 in the afternoon. I don't know about you guys, but I'm not going to be tracking the markets for sure. It's a big one, right? Absolutely. And if India goes through, then you have that big bang Sunday.
Oh, absolutely. Absolutely.
So I
recant my
volumes are going to thin out maybe post 1:30, right? I mean, no, but jokes apart, there is a global sell-off and you have to deal with it. Of course, the bulls were on top, but today is going to be a different day. There's a gap down opening that we're looking at. It's in fact getting worse by the minute. So the SGX Nifty is at the lowest point of trade. This crypto sell-off that Prashant was referring to is also going to weigh on the market for sure because of all that's transpired, and it's really spectacular. I mean, what's happening in the crypto market, right? Binance has now backed out of plans to acquire the rival FTX after having put in the word and almost the money for the last many months. Finally, FTX is pretty much on the verge of a collapse, and we've seen it in Bitcoin as well. $16,100, which is, I think, the lowest that we've seen since November of 2020. Some ripple effect is what we're seeing in global markets too. The midterm elections in the US were a bit indecisive, so there's some lack of clarity there of a control of the Congress in the US. So that's having a bit of a rub-off impact on global markets. But yes, as we were discussing, all eyes will be on the CPI data. The headline CPI is expected to grow about 7.9%. In that context, for our own markets, the going has been really good. But today, after the gap down opening, will there be a buy-in? You never know. Time will tell. But that's been the trend so far, a buy on dips market. The FII buying has cooled off a little bit. It's less than about 400 odd crores, so not as high as what we saw in the last many days. DI selling is there. So let's see, today is a tricky day for the bulls, but will they use it as an opportunity to lap up their stocks? Because, you know, that's been the trend for the last many days.
That has been, Sonia, but I think because of the US inflation number, and it's proved to be so pivotal in the past as well, maybe it's better to just wait. Look at that data and then decide what to do. So, as I said, you know, the midterms did weigh, but the CPI number, and if it's a beat, it perhaps puts pressure, upward pressure on the dollar. If it's a miss, and it has to be a meaningful beat or a meaningful miss for any sort of meaningful price action, subsequent price action. So I think, makes sense to kind of wait this one out and see which way things go, because it will drive Fed pricing, dollar, etc. By the way, I was pointing out how the dollar has been weak for 3 days. It reversed yesterday. The DXY is now closer to 110.5 as compared to, coming to that 20-week moving average, etc., which is 109 point something. All right. Now, the S&P ended a 3-day rally, and we were down about, 2%, 2.1%. The Nasdaq a little bit more. It's a combination of inconclusive midterms. Earnings are coming in poor. I mean, we've seen, for example, the single largest tech layoff in history, the Meta layoff that we kind of talked about. All of that will weigh. And of course, there is the crypto turmoil. It's unclear how much of this crypto turmoil will weigh on, in a direct way, or even in an indirect way, on other asset classes like equities, etc. But, people like Mark Mobius, who've come on the program for all through this year without a prompt of put forward the point that it's an important asset class in the US now, and what happens there has implications for what people will do with their money in other parts of equity stocks, treasuries, etc. So Bitcoin and Ethereum lost 14 and 16% respectively. On Bitcoin, it's the biggest 2-day loss since 2020. I would say no direct spill-off. It doesn't add to sentiment in a positive way, perhaps does something on the negative side. Oil is thankfully back to about $92 a barrel, Brent oil prices. Inventory data came out, and I think that pushed things. Nifty is back in the congestion zone. I won't be very specific with levels on the Nifty, but the fact is we are again around the 18,100 kind of level, which the index has been around for the last, almost 6 trading sessions now. So you need a conclusive push. And this is a point I was making on Monday as well. That push seemed like it came, but it fizzled out yesterday. So I think we'll see. You need to get past 18,200, 18,300 in a meaningful way. On the Bank Nifty, we did hit a high, took out the earlier September levels of 41,840, but we closed below it. So that kind of becomes the immediate kind of level to watch. And I think it would add to confidence if that were to be taken out in a significant way. On the way down, 41,434 is a support level on the Bank Nifty that you need to watch out for. So, as I began by saying, maybe today with an inflation number looming in front of us, but that's only tonight in the US, perhaps a wait-and-watch kind of strategy makes more sense. Nigel, what are you watching?
Well, morning, guys. If we didn't have enough red on the screen, Sonia decided to pile in, right, on that one. Red Sonia today, but it's going to be blue, right, Sonia? Second half of trade today.
Bleed blue, right?
Weekly expiry can wait. India all the way. All right, okay.
But England's also got a very strong chance, right? They're playing really well.
We're coming out on
Just
top
stating
today.
the facts.
We're coming out on top today. No two ways about that. And we have got a date on Sunday. And on Monday morning, we'll celebrate out here. Let's hope. Okay.
Absolutely.
Let's get back to the markets. That, in terms of flows first, just want to highlight a couple of factors. The FIs, they continue to remain buyers. So yesterday, they bought 400 crores odd, but that's the lowest you've seen in the 9 sessions. Now, when I look at the institutional flows, I look at the FI and the DI number together. And yesterday, they were net sellers. If you're looking at the previous 10 sessions, well, they were buying close to around 1,000 crores odd. Now, that was the reason that, in fact, we did see some selling yesterday, because otherwise, the FI flows have been so strong, it's been offsetting the DI outflows. But yesterday, that wasn't the case. So we'll have to keep an eye out on this, particularly since we have some supply that's coming into the market. You got that Axis Bank deal. You have some of these new age IPOs like Nykaa, where the lock-in expires. So we'll keep an eye out on that. The FIs in the FNO market, they continue to remain net long on index futures. However, on the option side yesterday, they wrote calls very aggressively. So they wrote close to around 11 calls yesterday for every one put. So, that's telling you that, in fact, at higher levels, we'll actually see some bit of supply that could come in. On the option side, what were they writing? The 18,300, 18,200 calls, both of them massive open interest build up, close to around 95 lakh shares added between them, telling you that there is going to be supply. That 18,350 will require a bigger trigger to get past that. However, on the downside, the 18,000 put, that has the highest open interest, and that's the line on the sand. Near-term support will come in at around the 17,950 odd mark. Remember, last week itself, we visited those levels and then we saw a bit of a bounce. So for me, that's the first level you need to look at in terms of support. Resistance, as I said earlier, 18,300, 18,350. The buy on dips thesis is going to be tested today. Yesterday, it didn't work out. Today, it's going to be tested because we're likely to start off with a cut of close to under 100, 110 points odd, which will not be such a bad thing. If the first hour lows are defended, given that it's expiry and you have the highest open interest at 18,000 put, risk reward could favor the bulls. So we'll keep an eye on that. SGX Nifty has moved to the low point of the day as we speak. What else, Sonia?
Absolutely. So 100 points lower, right? I just want to take what Prashant was saying forward about how Meta has had the largest layoff in the US history. 11,000 people laid off. And that impact is felt on corporate earnings as well. I mean, just look at Tata Motors, right? It's a player that has a huge global focus. And they're saying, they're not mincing words. They're saying that the global challenges continue. They've, in fact, lowered their EBIT guidance as well for FY23. Earlier, they said they'll do 5% EBIT for JLR. Now, they're saying at best it'll be positive. So these global-focused companies, you just want to sort of keep them on your radar. Be a bit cautious over there. There are a lot of earnings to watch out for today. There's Eicher Motors, Ashok Leyland, Bata coming out with numbers. So a lot of non-index large caps as well that we'll be tracking closely. And of course, the Axis Bank deal, government will be exiting Axis Bank with 1.5% stake sale. And that will garner about over 4,000 crores. There's the Nykaa lock-in that expires. So lots to talk about. But without wasting any time, we kickstart the day with a red hue on the screen. And first up, we have a comment coming in from Venugopal Gare of Bernstein, who says that India needs to deliver for the greater good of emerging markets. And this is the message from emerging market investors struggling with uncertainty in China. He says while FI flows turn positive from July, the level of flows, however, does not suggest any active shift yet, as valuations are rich and investors await an earnings lift in a broadly slowing economy. He says they stick with their sector allocations which favour financials and remain underweight on consumption.
Well, let's get you some money market views as well. Parul Mittal-Sinha, Standard Chartered, says the dollar INR has slipped below 82 a dollar handle last week on broad dollar weakness. She expects the dollar INR to trade in the 81 to 82 per dollar range this week, with dollar and oil prices staying key drivers. She says likely widening in trade deficit and a real effective exchange rate overvaluation is likely to continue to pressure forex in the medium term.
Okay, and on the bonds, she says the domestic rates eased last week, mapping global trends post the weak non-farm payroll print. She expects the 10-year benchmark bond yield to trade in a 7.3 to 7.5% range, with a close eye on US and India CPI prints. She also expects easing in the US CPI to 8% from 8.3% earlier, while India CPI probably will cool to 6.6% versus 7.4% earlier.